All right, I'm going to get going. Good morning, everyone, and welcome to today's Business Support Series webinar. Thank you, everyone, for joining us. My name is Becky Davison. I'm the Vice President of Marketing here at the Halifax Chamber of Commerce, and I'm your host for this morning. The way that you end things matters just as much, if not more, than the way you start things. Therefore, planning an exit strategy for your business is critical in the coming years, as there will be many businesses in the market looking for purchasers. Today's session will focus on what business owners need to think about when considering selling their business. I want to thank you for everyone who has already submitted questions, and we'll get to those at the end of the presentation. In the meantime, if you have questions today, you'll see down at the bottom there's a Q&A box. Feel free to put your questions in throughout the presentation, and we'll get to them as time allows at the end. And it's my pleasure to now introduce today's president, Drew Barber, Managing Director and Senior Advisor of MC Advisors. Drew has delivered transformative advisory work in over 50 countries, maybe more, probably more. With his return to Atlantic Canada, he was able to help launch MC Advisory, where Drew aims to help Atlantic Canadian leaders to innovate, transform, and plan for success over the long term. Over to you, Drew.
Great, thank you, Becky, and good morning, everyone. Thanks for joining. We appreciate you taking some time, and we look forward to a good discussion and an exchange with you on the topic of succession planning and exit strategy. As Becky said, my name is Drew Barber, and I'm the Managing Director at MC Advisory. So what I'm going to start with this morning is just a few words about our firm, and then I'll introduce to you my colleague, Steve Bragg here, who will lead us in the discussion today. So MC Advisory is a relatively new firm, and we're coming up on 1 year now in the market. And we are a boutique firm, which is just my fancy way of saying that we're very focused in what we bring to the market. Our aim is to do a few things extremely well and at a price point that works for this particular market. We've assembled a great team across all Atlantic Canadian provinces. They're very experienced and they're experts in our focused set of offerings. And our target client is you, the small to medium to mid-size enterprise entrepreneur in Atlantic Canada. And the services that we're taking into this market to you fall under a practice area that we call business growth and legacy. And basically that includes strategic planning, succession planning and growth strategy and exit strategy, mergers and acquisitions, so helping our clients to buy and sell businesses. That's all the elements that we would put under the business side of business growth and legacy. And then the other category is people-related topics. So everything HR, whether that's your HR strategy or your workforce planning, or your programs such as compensation frameworks, your occupational health and safety, or how you approach diversity, equity, and inclusion, and then everything around policies, job descriptions, recruitment, and retention. And we bundle a lot of those HR elements up into something we call HR as a service, where essentially clients can buy the HR department from us. So we basically become the HR department for our clients, and we do that at a fraction of the cost that it would take for our clients to build that function internally. So that's MC Advisory. So now let me introduce to you Steve. So Steve here is the leader of our business growth and legacy practice, and he's a senior advisor into the market. Steve has over 20 years in public accounting between Grant Thornton and Deloitte. He was a partner at Deloitte in their transactions and valuations practice. Steve has helped many clients around our region buying and selling companies and helping them with their succession plan and their exit strategies. He's a chartered accountant. He's recently been named a fellow chartered accountant, which is in recognition of his outstanding contributions to both the profession and the community in which he lives. He's born and raised in a true Newfoundlander, I can assure you that. He lives there with his wife, Lori, and his daughter, Bridget, and he travels around the region to service the market with his team. So with that, Steve, my friend, over to you.
Thanks very much, Drew, for that introduction. And if you just bear with me now, I usually like to do presentations face to face, but we're obviously doing this via webinar. So I'm going to try to share my screen here. If you bear with me 1 second. Hopefully now you can see the presentation. And first of all, again, thanks, Drew, for the kind introduction. And I have to say, I'm really glad to be back to my roots and working with the owner-managed space in the small to medium-sized business. As Drew suggested, I spent over a decade with Grant Thornton, where I did a lot of work with owner-managed businesses. And then I had 8 years at Deloitte as a partner in the valuations and transactions space. And then I spent 3.5 years as the chief operating officer at Cox and Palmer. So I was in the trenches. I was running that business. It was all through COVID, during the protocols, etc. So I really think my experience at Cox and Palmer is going to help me even more as I move forth in terms of being a consultant in the Atlantic Canadian market, because I know what it's like. I know the pain when you're operating a business. This presentation, really, I'm focused on sellers, and just to give you a high level of what you should be thinking of if you're thinking of exiting your business. And from a buyer's perspective, if we have some buyers on the line, this will give you some good insight as to what sellers are thinking. So having framed that up, I'll work through the slides. I usually like to walk and talk. The best I could do today is be here at my stand-up desk, but going to go through these slides and then certainly welcome questions after, and we'll do our best to answer them. And if we can't get you the answers, we will get them after the session to you. I promise you that. So want to start here. This is a picture of my 8-year-old daughter, Bridget, who Drew alluded to. And you could probably see from my background when we started, I am an avid curler with a picture of Mr. Guju behind me. And I also like to golf, and my daughter's middle name, if you take nothing else out of this presentation, you can say that you met a guy who named his daughter after a golf course. Her first name is Bridget, but her middle name is Augusta. And for any of you golf fans out there, you know that's where they play the Masters, which is my favorite sporting event of the year. But this was over the summer, and we were doing a daddy-daughter day, we call it. And I had taken a little bit of time off before I started with MC Advisory. And my daughter said, "Daddy, you know, what are you doing in this new job?" And I had to think about it for a bit, and I wanted to put it succinctly. And I said, "I'm going to help people buy, sell, and value their businesses." And she said, "What do you mean by value?" And I said, "I'm going to help them determine how much their businesses are worth." And with that, we went back to the mini golf, and I thought, I've got a really good tagline now. And that's really what I'm focused on, is the buying, selling, and valuing of businesses in Atlantic Canada. So I definitely have to give my daughter a big shout out for making me think about that. For the next 15 to 30 minutes, there is a lot of content in these slides. As I said, my style is typically to have a conversation with you. I like to walk and talk, but unfortunately, we'll have to work with the webinar here. But again, as I suggested, the theme of this presentation is really some things you should be thinking about in terms of maximizing your business value on an exit. And as Drew indicated earlier, hopefully we have a lot of small to medium-sized business owners on the line. And for a lot of business owners, your business is really, it can be your most valuable asset. And you put a lot of blood, sweat, and tears into building your business. And it's something that's going to help you fund your retirement and take care of your family. So I want to provide you with some ideas as to how you can increase that value of that investment when you make the decision to exit. And again, for prospective purchasers, this may give you some food for thought to think about if you are in the market and buying a business. So first of all, congrats, small business in Nova Scotia. Prior to this presentation, I did some research. And as you can see, as of December 2021, so at the end of last year, there were over 31,000 businesses that were noted in Nova Scotia. And interestingly, over 26,000. I mean, if you look at the numbers, almost 27,000, almost 87% of those businesses are businesses with less than 20 employees. And that's, to a large degree, the target market that we are focused on. And for fun, being a CPA, I decided, let me see if I can put that in a numerical perspective in terms of employees. So I took the midpoint, 1 to 4, I took 2.5. And then in the 5 to 19 range, I took 12. And I just did a quick calculation based on the number of businesses. And I came to an estimate of over 165,000 people being employed by businesses with under 20 employees. And when I did the research, and it told me that there was about 506,000 people in the workforce in Nova Scotia. Basically, you're talking about 1/3 of people employed in Nova Scotia are in businesses under 20 employees. So there is no doubt that small businesses drive the Nova Scotia economy. And you'll be interested to know I did a similar calculation for Newfoundland and New Brunswick, and it's about the same, about 1/3, just on the quick calculation. So again, small businesses are really the fabric of our economy. So for today, just kind of to frame things up, a couple things that I'm going to talk about. I'll talk about some trends in the M&A market that we're seeing. I'll talk about why you should have an exit strategy if you're planning to transition your business. I'll talk very high level on steps in the sale process and a few things that you should consider. Talk about who could potentially buy your business, who are the purchasers out there, and then talk about business valuation and valuation enhancement. What can you do to make your business more saleable? And then a very quick overview of our process. So with that in mind, let's talk about some trends in the M&A market. And this is when I really got to thinking about coming back into the consulting world, and I thought I really could offer something and had something to help. It was in January of 2021, and I listened to David Chandy, who's the CEO of the Atlantic Provinces Economic Council, which you'll know as APEC. And they did a subsequent media release, but when he talked, he estimated that there were 25,000 businesses that would transition in the next 2 decades in Atlantic Canada. And at that point, the light kind of went on for me. I was thinking about, maybe looking at some career options in 2021. And when I heard that stat, I felt, this was a great opportunity for me to get back into working with clients. Another interesting stat that he laid out there, and it goes to our demographics. 30 years ago, there were 20 young workers entering the workforce for every 10 retirees. So 2-to-1 ratio, think about that. 20 young people entering, 10 people leaving the workforce. Now, 30 years later, there are just 7 young people entering the workforce for every 10 leaving. So we don't even have enough in Atlantic Canada to replace the retirees. So there's definitely an aging demographic. Further to that, 40% of people who are self-employed in Atlantic Canada are over the age of 55. So when you put all that in context, there's a big storm of transitions that are going to happen and business owners who are going to transfer their wealth. The other thing that's happening is we've been in this global pandemic for virtually almost 2 years now. And what I'm seeing as a trend, and in talking to some business owners and advisors, is that business owners are really shortening their timeline to sell due to the COVID-19 pandemic. A lot of people have had a couple of tough years. They were probably thinking about selling, and now that timeline has increased dramatically, and people are looking to, cash out their business and maybe go down south for 6 months, a year, or whatever the case might be. But there's no doubt this trend is happening. The other thing that's interesting is that family transfers are declining, and we see it more and more. There's definitely an increasing trend of kids who want to, put their own footsteps in the sand and want to do their own thing. They've seen their parents work extremely hard in their business, and they have decided that they want to do their own thing. So there's no doubt there's less intergenerational transfers that are occurring. And then from a due diligence perspective, and I'm working on a file now, and it's getting more comprehensive. The purchasers are really digging deep. And in particular, they want to understand the overall impacts of COVID-19. And to that degree, you know, some businesses have definitely been impacted substantially by COVID-19. So they want to get a real handle on the long-term sustainability of cash flow. They want to understand what government funding and subsidies have been received and how that's impacted the financial results. And they also want to know what staffing modifications have been made. And as I'm sure you as business owners, a lot of people had to make some tough decisions with respect to staffing when COVID-19 hit, and purchasers are really trying to establish the long-term ramifications of those. Another trend that we're seeing is there's definitely a use of more deferred compensation to match, you know, the seller expectations. A lot of times in a transaction, the business owner wants more than the seller is willing to pay, or sorry, a business owner wants more than a purchaser is willing to pay. So to bridge that gap, what we're seeing is a couple of things. We're seeing what we call a VTB, which is a vendor take back. And by that, I mean, if you're not familiar with it, the owner effectively finances some of the purchase price. So let me give you an example. A business is selling for $100 or $1 million. The purchaser is willing to put $700,000 cash up front, but then they want the owner to act as a bank and finance the remaining $300,000. And that owner gets paid out over a number of years. A lot of times you only get interest for the first couple of years because the bank wants the purchaser not to pay any principal. So the vendor effectively acts as a bank. The other thing that we're seeing is earnouts. And on a very high level, what an earnout is that, again, to bridge the gap, and if I use that analogy that I just used, business sells for $1 million, 700 cash up front, 200 in vendor financing, and then maybe 100 is an earnout, which means the owner does not get paid unless the business does a level of EBITDA after the sale. So purchasers use that, and they'll say, okay, you're telling me your business is doing $250,000 or $300,000 worth of EBITDA. Prove it to me. If you can show me that after the sale, then we'll pay you the additional $100,000. So vendor financing and earnouts are seeing more and more. Financing institutions are making modifications to their terms. The banks, you know, there's tighter covenants and sometimes shorter amortization periods for the purchaser in terms of their financing. So a lot of these things are happening. The very good news, there are still a ton of purchasers out there who are seeking to acquire businesses. We're seeing a lot more in terms of private equity firms, large private equity firms. And we also have a number of purchasers, I will say, in Atlantic Canada who are looking to buy businesses. I currently have a purchaser list, I'd say, of about, I'm going to say 30 purchasers in Atlantic Canada who are looking for owner-managed type businesses. So why should you have an exit strategy? I'm a big quote guy, and Drew referenced that I'm a CPA. I did my chartered accountant back in 1999, and I actually failed the CA exams in 1998, which was a tough pill to swallow for a guy who had been done very well academically. And one of my quotes back then was, failure is success if we learn from it. I kept telling myself that for a year, and fortunately I was able to get through the second time. But I love quotes, and I saw this quote, and I'm not an auto racing fan, but I felt it applied very well to a business owner when you're selling your business. And Bobby Unser, who was a 3-time champion of the Indianapolis 500, said success is where preparation and opportunity meet. So being prepared when you sell your business can really make it a successful transaction at the end. So why should you have an exit strategy? Well, as I said, there are purchasers out there, but it's a competitive market. There's less intergenerational transitions that are happening. So for a lot of business owners, that's one less option to sell. And I'll talk about some prospective purchasers of businesses as we move forth the presentation. There's also more options for people in the workforce outside of owning their own business. And I refer back to the statistics that I gave you earlier in the presentation, that there's not enough people entering the workforce to cover off the retirees. So people who are in the workforce have more employment opportunities and may not seek to go down the road of buying a business. So that makes it a little more competitive. And as I said, purchasers, although there are a lot out there, they are exercising more scrutiny on their due diligence, and they really want the strong business opportunities, right? They want the juicy ones. They want the businesses that can thrive on their own without the owner. If the owner leaves for a month, the business can still operate. If the owner decides to go down south or whatever, they're not as interested or looking towards the businesses where the owner's spending 80 hours a week in there and doing 6 different roles. So you need to bear that in mind if you're thinking about preparing your business for a sale. Also, in terms of your exit strategy, there are a number of tax considerations, and I am not a tax expert. I make that very clear. We at MC Advisory, we will work with either tax experts at other firms, accounting firms, or we do have a lot of in-house capability in terms of our lawyers. We have a number of lawyers who've done the in-depth tax program. So we have that expertise, but I'm not a tax expert. And I joke, you know, from the time I started this presentation till now, the Tax Act has probably changed. But there are a couple of tax considerations when you're selling your business. First, and you may not be aware of this, but there's what's called the lifetime capital gains exemption. And in 2021, that was $892,218. And what that means effectively is if your business qualifies for this capital gains exemption, you can get the first $900,000 of your business sale tax-free. So that's a big thing. And there are a number of tests that need to be met. And I'm not going to get into the tests, but just to let you know, that option is out there for you. Then think about this. If you have a business that you own with your spouse, you're both shareholders, all of a sudden the 900,000 becomes 1.8 million that you can get tax-free. That's a big thing. If you think about it, on $900,000, the tax you're probably looking at is about a quarter of that. So, you know, it's a couple of $100,000 in tax. If you and your spouse own, it's $400,000 or $500,000 in tax. That is a big savings that if you can qualify your business. So you need to be thinking about that when you're looking to sell your business. The other thing that's out there from a tax perspective, you may have heard of family trusts. And what you can do with a family trust, Drew and I just spoke to a business owner yesterday, and they've set up a family trust. And the husband and wife are shareholders or beneficiaries of the trust, as well as the wife's parents and their 2 kids. So by doing that and setting up the proper structure, they are able to avail of 6 capital gains exemptions. So 6 times 900,000, that's over $5 million tax-free. That's a big saving when you think of a quarter of that could be taxable. So you're talking over $1 million in tax. The only thing with a family trust is if you get into that planning, you have to wait 2 years before you can sell your business. And that goes for the capital gains exemption as well. If you don't qualify, you have to do stuff to qualify, and it can take you 2 years. So that's why planning is so critical. And actually, in my experience in my prior life, I saw one situation where a business owner availed of 13 capital gains exemptions, which is, you know, that's off the charts. So you can imagine the tax savings there. And as well, from a tax perspective, there's just overall structure and planning. I refer back to if you and your spouse own a business, you both have the capital gains exemption. Well, maybe you have a business and you're the only shareholder and your spouse doesn't own shares. Maybe you need to think about getting shares in your spouse's hands. Again, you'll have to wait 2 years, but that gives you the opportunity to avail of 2 capital gains exemptions. And there's other stuff that can be done from a planning perspective when you consult with your tax advisor. There's what's called the capital dividend account in a company, where you can pay dividends out tax-free and get money out of your company. Maybe your company has some losses that you can utilize. So the high-level message is that from a tax perspective, there's a lot of stuff you can do to save yourself money on a transaction. So that's why you need to be planning ahead. As well, in terms of an exit strategy, you can look at your business today and look at value enhancement strategies. And I'll talk a little bit about what makes a business more valuable at the end of this presentation. Also, by planning, this is what stuff we do. We develop marketing materials. We can help you think about what documents you need for due diligence, and just overall planning. And I get back to the success is when planning and opportunity meet. The more you plan, the more saleable your business is going to be, and probably the more proceeds you're going to get out of the process at the end. So steps in the sale process, just a couple of things to consider. And I know I'm repeating myself here, but preparation is key. I've told you about the current market conditions that exist, and the purchasers are looking for the really juicy opportunities. I've told you about tax planning and how that really can, get as much money in your back pocket as possible. So preparation is key. In the sales process, whether you use MC Advisory or another advisor, you're going to benefit from that. And a couple of things that you want to think about. First of all, one of the first things that we do when someone is selling their business is we want to understand the value, and it's critical to be on the same page. And I made that mistake one time in my career. We had a business owner who wanted to go to market, was adamant about going to market. And we kind of tried to slow him down and said, we need to establish the value. And on a very high level, we had said the business would probably garner between $2 and $3 million. The owner wanted $7 million. And we went to market and we got a couple offers in that $2 to $3 million range, and the owner was not happy. But we were not on the same page. So, looking back at that transaction, that didn't occur, and it didn't occur because the owner wanted too much. It's critical to understand your value and be on the same page with your advisor. The other thing that advisors can do, as I've said, identify prospective purchasers. I'm aware right now of about 20 groups or individuals that are looking at acquisitions in Atlantic Canada. So that's just the starting point. What we do with you if we're going to sell your business is we develop what we call a prospective purchaser list, and we're very targeted and focused. So between the people that we know about and then people that we talk to you as business owners about who may be interested in purchasing a business or your business, we can develop a nice list and approach them confidentially. So identifying prospective purchasers is critical. Also, if you have an advisor, it gives you more time. It's very imperative that you stay focused on the business. I'm dealing with a business owner right now, and he had, and we're in the letter of intent stage, so we're moving the process along very well. He had 2 tough years during COVID, and I've been working with him since October, but he's been able to focus on the business. And here in 2022 so far, 2.5 months in, he's having a great year. And he's been able to focus on continuing the operations of the business while I manage the process for him. The other thing, in terms of having an advisor, maximizing price. There is absolutely no doubt that competitive tension increases the price and improves the terms that you get on the sale of your business. And in terms of a process, we run a very targeted approach with timelines, and we structure a deadline for when we accept offers. And when you get 3 or 4 parties who have offers and there's that competitive tension, that gives you the opportunity to maximize your price. And the data out there says you will probably increase your price 10 to 20% if you run a competitive, structured process. And I'm going to give you an example. I just made a bid for a company in Newfoundland on a company outside of Newfoundland. We went in with a very competitive offer that I thought was extremely competitive, and we were not in the running, and we got a sense that we had to go significantly higher. My purchaser decided to go another 21% from their first offer, and we still didn't get there. So having that competitive tension, having that auction type process, funny things happen. And I spoke to the advisor on the other side, and she told me it's just that's the market right now. People are, paying big multiples for companies. So having that competition is really important. We also always say, if you're approached by a purchaser, A, don't show your financials immediately, and B, don't just talk to one purchaser. There are some deals that happen quietly, but if you really want to maximize your price, running a process will get you there. So who are some prospective purchasers of your business? Well, first of all, you know, you can transfer the wealth to your child. And how that's typically done, and I want to keep it very high level, is an estate freeze. And what used to happen, and let's use the price of $1 million. Fair market value of your business is determined at $1 million. You as a business owner transfer the business to your kids for $1 million. They now own the common shares of the business. You take back preferred shares. And how you get your $1 million is you redeem dividends over time on those preferred shares. But bear in mind, when you're redeeming dividends, as you know, as a business owner, if you've been paid dividends, you have to pay tax on that. Well, in June of 2021, Bill C-208 received royal assent and is now law. And what that effectively means is that you can transfer a business to your child and get the capital gains exemption, which you never could before. So that's a very important thing if you're thinking about transferring the business to your child. That is a new thing. Before you couldn't get the lifetime capital gains exemption, but now you can. Another potential buyer is a management buyout. We see that happening all the time when your leadership team in your business buys the business. Oftentimes in a transaction like that, the owner does finance some of the purchase price, getting back to my discussion about a vendor take back. So you don't get you don't get the full price in cash. Typically, most vendors will finance, and they do that too because it's the people who've built their business and help them be successful who are now buying the business, so they're willing to give back. We see that a lot. And typically, the owner knows the business is in good hands. These are people who've been in the trenches, who've run the business. So the owner typically leaves the business on a transaction like that. There's also what we call a financial buyer. Maybe it's a private equity group, but could be full or partial ownership, and the owner may or may not be required to stay in. Basically, a financial buyer is like a Steve Bragg comes in and buys the business, who has never run the business, who wants to own his own business, or a Drew Barber. That's a financial buyer. Typically, you won't get the maximum price from a financial buyer. Where you will get the maximum price is from what we call a strategic buyer or a special purchaser. It may be a competitor, and the gentleman that I'm dealing with now, he's selling to a competitor, and they can get synergies. They know the business. They can probably consolidate a lot of their costs. So, they may be willing to pay more. Maybe a customer, maybe a supplier, but this is really where you get the most proceeds on the sale. And in this type of business, and we're seeing this actually with businesses coming outside of Atlantic Canada who want to get into the Atlantic Canadian market, they're willing to pay a high price, but they're based somewhere else and they want the owner to stay around maybe for a year or two. But here's where you get your biggest price from a strategic buyer. So they're the types of people who could potentially buy your business. So getting near the end here so we can get to some questions. Business valuation and valuation enhancement. And it has been said that business valuation is an art, not a science. There's no doubt. I mean, I've been doing this for 15 years or more. There's a degree of professional judgment that is applied when you value a business. But the fundamental principle that valuators live by is that we're valuing in what we call a notional market. And we use fair market value, which is the highest price available in an open and unrestricted market between informed and prudent parties acting at arm's length and under no compulsion to act, expressed in terms of money or money's worth. Essentially, that's valuing in a perfect world, which really never happens. But that's how we as valuators have to value. And when we do that, if you think back to the purchasers that I said for your business, we cannot quantify a special purchaser premium. We can't quantify that there's a company that's going to come in and pay just a ridiculous multiple for your business. So we value your business, if you are looking at a business valuation, as if a Steve Bragg or a Drew Barber, i.e. a financial buyer, comes in to buy your business. So the point here is that fair market value determined in a notional market and the price of your business can be two different things. And oftentimes when we value, the price of the business ends up being higher. So if you're a business owner that's thinking of selling, what the valuation really does is it gives you some parameters. It's for your internal use only. You don't have to share that with the purchaser, but it really gives you an idea of what a notional buyer would pay for your business. This is a question that everyone asks. So, what drives value in a company? So there are a number of factors that impact value, and I'm just going to do these on a very high level, give you some stuff to think about. At the end of the day, you'll hear EBITDA multiples. And if you're not familiar with EBITDA, it's your earnings before interest, taxes, depreciation, and amortization. And effectively, a buyer is looking at what kind of cash is this business rolling over year? I will tell you, cash is critical. So your stream of earnings is essential when someone is buying a business. They want a business that's got a strong EBITDA. The other thing that I hear time and time again, Steve, I'm looking to buy a business. One of the things that's critical to us is a strong management team. So if you're someone who's thinking of selling your business and you're very active and deep in the operations, you probably want to be thinking about grooming, that leader in your business who can run the business without you around, because that's very attractive to purchasers. Obviously, stable income. Purchasers like businesses that have that steady income, or obviously an increasing income. If it's up and down, that's a little more challenging from a purchaser's perspective. Not to say that they won't buy a business like that, but purchasers like that stable income. They obviously look at the industry and what's the growth potential of the business and the industry. Another thing that's important to purchasers are their high barriers to entry. Is this a tough business for someone to break into? Because if it is, that's great. If you buy a business that everybody can get into, that may make it a little less attractive. Obviously, having key contracts and a solid customer list. Customer list is very important. And you have, do you have a recurring revenue from customers? Very important. If you, and this has become interesting with COVID, long-term leases in place, but if you're operating out of a space and you do have a good lease in place and it's in for a couple of years and it's a good price, that's attractive to a business owner or a purchaser, excuse me. The other thing that purchasers look at, what kind of capital expenditure? Is this am I going to have to buy a lot of assets to operate this business every year? Or does it have a low, what we call CapEx? So i.e., do I have to buy a lot of equipment, or can this business run with a couple of computers purchased every year, or whatever the case might be? If there's a lower capital expenditure, that obviously is attractive to purchasers. And believe it or not, this comes up a ton, but having good financial reporting and accounting records is very critical. That sends a good sign to purchasers that, okay, can I see their monthly statement from October of 2021? If you can pull that off fairly quickly and you have good, solid financial reporting and accounting, that gives some comfort to purchasers. If you're 3 years behind on filing your taxes, that's going to create some red flags and doesn't get things off on the right foot. So that's very important as well. Just a couple more slides here, and then I'd love to get to some questions. So our process when we sell a business is very structured. We have broken it down basically into 3 phases. The first phase is a planning phase where we talk to you about value, look at some market metrics, maybe look at some potential ways to enhance your business, ensure you're ready for the you can qualify for the capital gains exemption, etc. So we typically say that takes about 6 weeks. I was just looking at one a couple of months ago, and they wanted to sell to a key employee. And when I looked at the balance sheet, I said, we got a problem. And it's a good problem to have. They had a ton of excess cash in the bank. And when you have a lot of cash in the bank and it's inactive and it's not being used in operations, it can throw you off for that capital gains exemption that I told you about. So now they have to take 2 years before they sell the business to clean out that excess cash and qualify for the lifetime capital gains exemption. So very important in the planning process to be looking at stuff like that. We say about 6 weeks. And then the selling part, another 8 weeks. So really you're looking at 3 months until you're probably getting some offers. And in that selling phase, we talk, and we'll do it in the planning as well. We'll identify prospective buyers, create that buyer list, set the timeline for the process in terms of getting offers, etc., and be very targeted in who we approach. We're not just going to hang a sign on your building to say this business is for sale, or we're not going to post it on the internet. We're very, we run a very discreet and focused process, because we know that business owners are very sensitive about having the information out there that they're selling their business. We use non-disclosure agreements. Are they 100% proof? I don't know, but we do use those in the process as another risk mitigation technique. As we sell the business, we try to keep it as quiet as possible. And then the closing, one of the beautiful things about MC Advisory, which attracted me and I think is a good thing in the market, we're obviously affiliated with McInnes Cooper, so we can pretty much take the process from start to finish. And if you choose to deal with McInnes Cooper or another lawyer, but in terms of McInnes Cooper, we do have lawyers accessible to us who are experts in commercial transactions. We can work together, and it makes the process very seamless. So I think that's very important from an MC Advisory perspective. So hopefully I've given you some really good, I hope just on a high level, some food for thought. It's hard to cover, there may be people out there who've owned a business for 30 years. To cover that in half an hour is challenging, but I hope I've given you some food for thought, and that now you're thinking about what's your exit strategy. And with that in mind, I am going to stop sharing my screen, and I actually have had a full screen here, so I don't know, there may be some questions come in, and I'll be happy to try and answer as best I can. And thank you very much for the time this morning and your attention.
That's great. Thank you, Steve. You were giving me flashbacks to my my finance class with the EBITDA talk. So that was great. Lots of great information. So I have a couple questions that were submitted first. There's no questions in the Q&A box, but just to encourage people to put some in there as we have a few minutes for questions. So you touched on this, Steve, but how do I know how much my business is worth?
Thank you, Becky, for that question. Yeah, I mean, I'd say a couple things about that. As I said, we can do a business valuation, and evaluation is based on techniques that are provided by the Canadian Institute of Chartered Business Valuators. So we can do a formalized valuation. The other thing that we can do is we can look at market data to see, there's what we call rules of thumb. And there's also transactional data, which give us an idea of, if it's a restaurant or it's a hair salon or whatever the case might be, we get an idea of certain metrics in terms of transactions that have occurred. So we can do the valuation, we can supplement that with the market data, and that usually gives you a pretty good idea. But at the end of the day, and what we've learned is that until you go to market and you put that business on the market tells the story, right? We can give a general indication, but as I said, there are some funny things happening out there in the market, and it could be, substantially higher than what we value the business at, but it's really tough to tell until you go to market. But overall, we can do evaluation, we can use some market metrics, and that gives you a pretty good idea.
The other thing, just to build on Steve's answer there, Becky, if I can, is he mentioned it in the presentation, is there is the professional evaluation process, there is the market data, but then there's also things that you can do within your control to increase all that value of your business, right? And there's a lot of opportunity to drive up the price of your business by doing things inside of how you're running your business today, whether that's organizationally or financially. But that really is a rock that needs to be uncovered, because there's a lot of sources of value to the seller in that particular category as well.
That's great. One of the things that you touched on, Steve, that you kind of, I was trying to capture some questions as we went as well, but did COVID and the pandemic impact these stats of 25,000 businesses over the next 20 years? And you said yes, shortening timelines. So you showed us a timeline there at the end. How quickly can someone potentially sell their business, turn that over, and still
Thank you.
do it the right way?
Thank you for your question. That's a great question. And with respect to COVID, it's interesting. Some businesses did suffer. Some pretty much weathered the storm, but there were some businesses that actually thrived during COVID, which was, interesting depending on what industry they were in. So that's, that's something to contemplate there. But sorry, your question. I got into the COVID discussion.
Okay. So I guess how fast? I mean, if people decide COVID, you know what? I don't want to. I'm getting out now. It was too much. I'm ready to retire. How fast can people potentially sell their businesses?
We typically say it's a 6 to 9 month process. That's provided you qualify. If you want to avail of the capital gains exemption, which is very important. A lot of business owners, they've never sold a business before, and that's a huge tax savings for people. Provided you qualify for that and the company is clean and that sort of thing, we typically say 6 to 9 months. For example, I started one on October the 1st, and we're hoping to close on April 30th. So that's a 7 month window right there. So it's not like the real estate market where you can, sell your house over the weekend. Unfortunately, it does take time. So you probably need to prepare for 6 to 9 months. It could be longer. Maybe it could be a little shorter, but I don't think much shorter than that.
Okay, great. One term that I learned today here is earnout, which is interesting to me. That takes a bit of the risk off the buyer. How did the pandemic affect that earnout when people are putting that in an offer of agreement of purchase and sale? Just wondering about that.
Yeah, I think where you really see that is business owners have a certain sense of what their business is worth. And I've seen that more so for businesses that may have been impacted by the pandemic. So they had a real steady 4 or 5 years, and then the 2 years of the pandemic, they've struggled, which really values at a point in time, and it's brought the value down a bit. So to get the owner back to the value that they were at before, and they can prove that, once they come out of COVID, they're going to get there. That's a lot of times where you see the earnout being utilized. And now we always say to sellers, if you're not getting cash on close and you're doing a vendor take back or you're doing an earnout, your money's at risk. There's no guarantee that you're going to get your money. What we do on a vendor take back is we try and take security. The deal that I'm working on now, they actually own the real estate, so the owner is going to take a second charge on the building just to have some kind of security for the vendor take back. But in terms of the earnout, there's no guarantee, and if the business doesn't hit the target, depending on how it's structured, you don't get paid. So you need to be very careful and make sure that if there's an earnout in your deal, it's structured in a way that it's achievable so that you can get paid.
Okay, so is it ever too soon to reach out to kind of get my business in order to sell, I suppose, would be my question.
Absolutely not. Even if you're thinking 3-4 years down the road, never hurts to have the conversation. A lot of business owners are so deep in the running the business that they don't really know what the value is. So maybe getting an idea initially of what the value is, as we talked about throughout the presentation, maybe starting to think about ways that you can make it more valuable on a transaction. Doing that a couple of years in advance is, a prudent thing to do if you plan on selling it, because you never know where life's going to take you. And so the more time that you plan, the better.
Okay. There's a couple of questions we received that I know you touched on, Steve, but people selling their business, you don't just advertise it in the classifieds anymore. So some of the questions are, okay, so if I don't have a family member or successor in the wings, how do I get it out there that this business is for sale? And you touched a little bit that it's done I don't want to say quietly, but you said kind of confidentially. So could you elaborate a little bit more on that?
Absolutely. As indicated, first of all, we know a lot of people in Atlantic Canada who are looking to buy businesses, first and foremost. Secondly, when you sit down and we have the discussion, depending on what type of industry you're in, we can have a discussion about who could be potential buyers of your business. And that's all part of the planning process, is developing that prospective purchaser list. And we also may utilize, I've got friends and colleagues in the business, advisors who are with other firms, who we talk regularly. And one of the processes that we do is we share, if there's going to be businesses that are sold, we share them amongst one another, without using the name initially. We do what's called a little teaser document, and we may be able to find purchasers who are clients of other firms as well. So between the discussions with the owner in terms of who could be prospective purchasers, the people that we're aware of who are looking at buying, and our contacts with other advisors in Atlantic Canada, we can develop a pretty good list and get some good circulation. But we really respect the confidential side and being very discreet about it.
Again, and you kind of touched on this too. I heard the dreaded capital gains tax. That makes me shiver a bit, but and you mentioned that you have access to accountants and things like that. So how do I handle the profits when I sell my business? I mean, you kind of touched on that, but if you wanted to go a little deeper into that.
Yeah, again, I mean, I'm not a tax expert, so when it comes to the capital gains exemption, we want to make sure you qualify, because as I said, if it's a husband and wife and you each are eligible for $900,000 in capital gains, that's first $1.8 million of your sale is tax free. So that's absolutely critical, that you qualify for that. That's $400,000 or more that you can take home, that you don't have to pay to CRA. So number one, that's imperative. Number two, the business owner I'm working with now, I'm not a financial planner. I'm not a tax specialist. So I've said to the business owner, okay, this sale is going to happen this year. There's going to be proceeds from the sale. You're sticking around for a while. You're going to take some, you're going to clean money out of the company prior to the sale in the form of a dividend. You need to be talking to a tax or personal advisor to make sure that you minimize your tax liability as much as possible. Maybe it's, some business owners may have a ton of RSP room. Maybe you can put some of the proceeds of the sale in an RSP, which defers tax. And maybe it's structuring the family trust where you can then pay dividends out over time and that sort of thing. But that's stuff that, should be talking to tax people on. But our main thing is when you come to us, we want to make sure that you qualify for that capital gains exemption, because that's a huge saving.
Amazing. Is there anything, I don't have any more questions and answers or questions in the Q&A box, but I was wondering if there's anything you guys wanted to add on or mention before I just close us out for the day.
Yeah, maybe I'll contribute one thought here, Becky, is as as Atlantic Canadians, we love to be Atlantic Canadians. We think Atlantic Canada a lot, but when you're in the situation of selling your business, we really encourage you to think beyond boundaries of Atlantic Canada. Now, that obviously depends on the type of business that you're trying to sell, but the market is really a global market to a large extent. And there's a lot of companies that would be of interest to other people in other geographies of the world. There's also, as we know, a huge push in Nova Scotia in particular to increase the immigration into the province in the coming years. So there are people looking to come in to the province. So if you work with us or you work with another advisor, I really stress you to challenge your advisor to open up the market of potential purchasers. Steve and I just recently were on a chat with a client of ours whose business we're trying to sell, and that business is in Atlantic Canada. But we've added purchasers on the list from Tel Aviv, from places across Europe, from the US, outside of Atlantic Canada. And that's just as a result of having relationships with banks, other advisory firms, your personal networks, and then doing the market research for the types of companies that would line up and maybe show some interest in in your particular product. So again, the boundary of your potential purchaser is very, very wide. So think big in terms of where you might be able to find that, because that will just, again, add more competition. And to Steve's point, increase your likelihood of maximizing your proceeds on the sale.
And I just add one thing to that, Drew. You know, whether it's MC Advisory or another firm, like, don't be afraid to sit down and have a chat with someone. We value and our confidentiality is imperative to us. If you just want to have a conversation at no charge, we're more than willing to sit down and just have an initial discussion, see what you're thinking, see what your plan is. Don't be afraid to reach out to whether, like I say, whether it's MC Advisory or another advisor. I go back to the slide that if you really want to maximize your price and you're running that competitive process, whether it's us or another firm, that's going to drive the price for you and the proceeds at the end of the day.
Awesome. That's great. Thank you very much, everyone, for attending today as well. It's amazing free information delivered right to your computer or laptop. So thank you both, Drew and Steve, for joining us, and really appreciate your time and your expertise and questions. I just want to say we've got some other events coming up soon. We're back to in-person events starting this month. So we have our Halifax Business Awards that I'm just going to share in the chat right now. That's happening April 1st. It's one of our most glamorous events. So we're profiling 35 business finalists. So you can get your tickets right online there. We have about 550 people already signed up. There's also many other events, both virtual and in person, that you can take a look at. And this video was recorded, so we'll post it on YouTube for future watching pleasure. So we'll send an email out to all the attendees with more information, and really appreciate everyone attending today. Thank you both. Bye.
Thank you so much.